Good morning, everybody. Hey, it is Wednesday, October 26th. Hope that your week is going well as it should be. We got a lot of earnings to talk about today, surprise turnaround yesterday in the markets, and more to discuss here when Scotty joins us in just a few moments.
One's Light FM. Okay, it's 8:37. Phillip's on the line. It's about that time. Let's head to Statler Financial Services in Sebring. Hey, Phillip, good morning. How we doing?
Hey, good morning, Scotty. Doing well. You and me in the seat one more time. And, yesterday actually turned around to be a decent day, which was, I don't know, a little surprising for me because, when you and I talked yesterday, it wasn't looking that way. It was looking like we were going to be kind of in the doldrums again, but we actually ended up with a really good day. The Dow Jones Industrial 30 was up a little over 1%, almost 1.1%. That was $337. The S&P 500 up 1.6%. That was up $61 to $38.59. And the NASDAQ, the big winner yesterday, up 2.25%. That was $246 to close at 11,199. So man, what a change from yesterday morning. And we're hoping maybe we can do that again this morning, Scotty, because we're just not on the positive side of things right now. We're still a little red this morning, but that doesn't mean it can't change by the end of the day.
All right.
We talked yesterday about some things that were finally going to start to come out after you and I spoke yesterday. And so we did get some economic news that came out at 9 and 10 o'clock yesterday. So the S&P Case-Shiller home price index, there's really no expectation, but it was down 9.8%. So that means that we're seeing home prices falling. They were down 5.3% last month, down another 9.8% this month, based on Case-Shiller. Now, FHFA, they kind of do the same thing. They have a price index. Their price index was down another 7.6%. So we see everybody's got a little different number, but they're heading in the same direction, right? We're seeing real estate prices coming down from where they were month over month.
Okay.
And then the other thing that came out yesterday was the consumer confidence index. And that's made up of a lot of different things, but we look at that number as just some indication of what the consumer is thinking and how confident they are of the current economy. And it fell. It actually missed. The expectation was for it to come in at 106.3. It actually came in at 102.5, meaning that you and I are getting a little less confident about what this economy is going to do. And rightfully so, right? Because we've been in this storm now for over 2 quarters, and it continues to ebb and flow and not look really good for 2023. So right. Those are the numbers we had. Now today, at 10 o'clock, we'll get new home sales will come out. It's expected to be down from where it was last month by almost 100,000 units. So we'll see at 10 o'clock what that does. On the other front, before we get to earnings, let's talk about mortgages.
Okay.
Mortgage demand hit the lowest we've seen, the biggest drop in mortgages since 1997. Pretty long time.
Right.
And,
yeah.
Yeah, and this number hit me. I hadn't really thought of it this way, but on the first of this year, mortgage rates were somewhere around 3%. Now, 7%.
Wow. Yeah.
Pretty big jump.
97, that's 25 years, right, Phillip? That's a long time.
That's a long time. And just this year, to think that on January 1st, you could have got a mortgage at 3% and now it's 7%. That's a big jump.
Right.
In less than a year.
I remember, so like the late 70s, real early 80s, weren't mortgages like well into double digits? We're not headed back to those days, are we, Phillip?
I don't want to say we aren't, but we could be. We've got the Fed's anticipated target rate that we read about earlier is about 4.6% on the Fed's fund rate, which is about another Well, a little less than 2%. So we could get close, Scotty. I mean, we could get up there in the nine and a halfs before it's all said and done.
Right.
Which would not be good. But we're seeing the whole mortgage area get decimated because of that, right? Interest rates are going up.
Sure.
Pretty much everybody that wanted to refinance has refinanced, and so now it's just new home sales, and those are starting to get tougher and tougher to get into.
Gotcha. All right.
On the other front, we've got earnings, and let's start out with Boeing. So Boeing had an unexpected quarterly loss for this last quarter. They actually missed by about, I think it's about 7 cents a share. Doesn't sound like a lot, but with the number of shares they have out there, that's a pretty significant miss. Revenue was the big deal, man. They were expected for the quarter to bring in about $17.75 billion rather, sorry. And they only brought in just shy of 16 billion. So so that was a pretty big miss for them. The biggest issue was that they've got a lot of cost overruns on Air Force One and a new tanker they're developing. So in that area, I think I saw that the defense unit, which is what's developing those two things, lost $2.8 billion.
Oh, wow.
Yeah, so that was not good, but they do have some good things on the other areas coming out. Alaska Airlines actually came out and exercised their option to buy 52 of the Boeing 737 MAX jets, and is wanting to add another 105 jets between now and 2030. So that was some good news for them. Not really helping their stock this morning, though, because they're down about 1.6% this morning.
Okie dokie. All right.
So we got quite a few things have come out today in earnings reports. We got Hilton also reported. They had better than expected quarterly earnings, and they raised their full year forecast. They continue to be a beneficiary of strong travel demand. Everybody wants to get out and go. And so they're up about 0.4% this morning. Hey, you might like this one, Harley Davidson, man, the hog dealers. They're doing well. They've got better shipments. They've been able to get stuff produced and out, stronger pricing, help them beat on their top and bottom line, and doing well. So they actually are up today almost 4%. A nice little bump.
Yeah, that is good. All right.
For those guys. Kraft reported, the good food producer, they had a big rally this morning. They also beat on top and bottom line. They've been able to successfully raise prices to help offset their cost. And so that's helped them. They're up 2.3%. Let's talk about a couple things in the tech sector.
Okay.
Some real common names here. We got Google, better known as Alphabet, better known as Google, I should say. They did report lower than expected profit and revenue. Google owns YouTube. And so YouTube saw a major drop in their ad revenue. First time since Google bought that company and started allocating out, and so you could look at separate entities within their unit. And so first time since then, Google's getting beat up pretty big today, down 6.75% this morning. And then the other big tech guy we had come out today was Microsoft. Microsoft, they did beat on their quarterly results, both on the top and bottom line. However, Microsoft came out and expects some significant declines in personal computer sales. And so that's going to be an issue for them going forward. And then they've also been impacted, we've talked about this a lot this week, by the strong US dollar, making it harder for them to export. They're down 6.9% this morning.
Okay.
Let's talk about one more, and then I'll let you go.
Okay.
Visa. Visa's kind of a bellwether, right? Because if Visa's doing well, that means people are spending money on their credit cards. They may
Okay.
not have it, but they're spending it, right? So
Right.
Visa,
Yeah. I've been
Visa
there. Yeah.
report
Okay. Yeah.
better than expected profit and revenue for this third quarter. They said their payment volume jumped. So they're doing well. People are spending money, which will be an indication too of what may be happening in the retail sector, which we'll get the retail sales number down here sometime this quarter. And so that may be some indication there. But so Visa's up 1.4% this morning, looking good there. So that's kind of what we're looking at right now in terms of companies that have reported. I know we've got some more headline news companies that will be reporting tonight after the market closes. Give us something to kind of chat about tomorrow. But before we leave, let's kind of look at what it looks like the start of the day is going to look like. It's not looking real rosy right now, but it wasn't yesterday either, right?
Right. Right. Sure.
You never know. We got the Dow down about 1/3% right now. The S&P 500 is actually down almost 1%. The NASDAQ 100 is down almost 2% right now. So some major declines on some of the indexes. On the commodities side, we've got silver back up over 19 now to $19.41. That's up 1/3%. Gold's up to $1,666 an ounce. That's up 0.5%. Crude oil is making a big jump this morning, up 1.2% to $86.37 a barrel. So, yeah, that's heading the wrong direction for sure. The foreign markets, they're all in the green this morning, at least in Asia, and in Europe, it's more of a mixed bag. So that's the way we're going to start the day off, Scotty.
All right, Phillip. Well done as always. And hey, when does that the GDP numbers come out? That's pretty soon, right?
That actually comes out tomorrow. So tomorrow
Ooh.
we'll have
All
the GDP along with the employment numbers and the durable goods order. So some important stuff comes out tomorrow that will kind of set us up for what the markets are going to look at the rest of this quarter.
Okay, very good. What else you got there for us, Phillip?
Hey, man, that's about it. Just want to remind folks, though, that, with all this volatility, it's an indication in your portfolio of how much risk you have. And a lot of folks don't know what their risk number is, and they don't know exactly how much risk they have. And having too much risk can be a problem. Having not enough risk can also be a problem, Scotty. And so that's why we developed our core retirement design. Give us a call at 863-382-0037 to walk through our core retirement design, and then join us this weekend.
Well, looks like we lost Phillip there.
Statler Financial Radio Show.
Well, let's go right to commercial, and we'll be back in just a little bit.
This is your captain speaking. We're expecting fair skies, a smooth flight, and about a 85% chance or so of making it to our destination. So sit back, relax, and enjoy the rest of the flight.
Would you stay on that plane?
Hey, folks, not sure exactly what happened there with the radio station, but obviously we lost them. But remember that tomorrow we've got a lot of news to talk about. Please join us again for our radio update on Thursday. It's very important. It's a lot of good news. Well, a lot of news coming out. We'll see if it's good or not when we get there. So, hey, have a great day. Hope you'll join us again tomorrow.